We're going to take a look at Figma today. So let's jump into investing.com and see where Figma sits. Here we are on investing.com at Figma's homepage. It's been a couple months since we've looked at Figma, and so doing an update. When I do these videos, I record and upload instantly. There's not a huge amount of editing or anything done like that because I want the data to be as accurate as possible once the recording has been done. So I upload as soon as I finish recording, so the data is the same. So if you like these videos, follow along, subscribe, and hit the bell icon so that you get notified when a stock update is done, so you can watch it as close to it being released. But things have changed. Figma, a quick update, is part of the IT sector. Quick reminder, part of the IT sector. They are a cloud-based collaboration service company that actually about 95% of the Fortune 500 companies use somewhere in their business. So they've got some big brands that they are clients, that they have as clientele. I think IBM, PepsiCo, some big companies use Figma. Last time we looked at it, it was about $27 USD, so the price has come down. It's got cheaper and more affordable, sitting at $20, almost flat, $20.05. In the last trading day, it took a dip of 2.95%, and the 52-week range is between $16 and $142. So you can see it's come right back down to the bottom area of that 52-week range, sitting at $20, with its peak being $142.92. Quick look at the fair value, and we'll look at valuations and things like that a little bit later. But the average fair value is $17.59. That is a downside potential of 11.8%. Uncertainty around Figma is high, so this would sit in what I would classify as a speculative investment, which is okay. You just don't want it to be a massive part of your overall portfolio. And so you don't want it to be, a big part of your portfolio to where the declines can have a big impact on your portfolio. Let's look at the financial health. The financial health sits at a 2, and so you can see the ratings here. And a big part of the reason it sits at the 2 is the profitability health, and that's with it still. Sometimes these companies take a while to actually become profitable. And so, for example, Uber took only recently had a year that it was profitable, even though it's been around for quite some time. Let's look at the bullish to bearish signals. You can see we have 3 bullish signals and 1 bearish signal. Looking at the bullish signals, it holds more cash than debt on its balance sheet, which is a good thing, and it's impressive gross profit margins, which is the case with many service businesses. When the business is a service, its profit margins is usually very high because the product itself is, they're not getting product made and having product in warehouses and stuff like that, and that's sitting there and paying for the warehouse rental space, all that kind of stuff. So the profit margin for services, think Adobe as well, and other companies like that, profit margins are very good. Liquid assets exceed short-term obligations. So basically, it is in a financial, even though it's not, the profitability is, there's some areas around that. There's financial health is a little weaker than what we would like to look at or like to see. it has the money there to handle its obligations, its debts, things like that. And the one bullish signal is 2 analysts have reviewed their earnings downwards for the upcoming period. For analysts, oftentimes they do lean to the negative side of things. Okay, let's take a look at the charts. In the past month, Figma has basically been flat, 0.45% gain. In the past week. In the past month, it is up 4.5%, up almost $1. In the past 3 months, it is down 11%. In the past year, it is down 82%. In the past 5 years, 83.57%, and in the past 10 years, 82.64%. Now, those are very similar because Figma IPO'd less than 10 years ago. So it came public less than 10 years ago. And so those are very similar, those charts. Let's take a look as we come to a finish towards the end of our video here looking at Figma. Let's take a look at the valuation for Figma. So there's a few things I like to look at here. The price to earnings ratio for Figma is sitting at negative 8.3 times, and the growth for the growth for its peers is -5, and for the for its peers is not the growth. Price to earnings for its peers is -5. For the sector is 13.1. So you can see that relative to its peers and its sector, price to earnings is further down, right? Now the PEG ratio is price to earnings to expected growth is -10. Now this is part of the reason it's considered a speculative stock is because of this number here, which looks at growth, price to earnings to growth, expected growth. Its peers is 0.05 and the sector is 0.01. Now, if this sits between 0 and 1, right, you'd say quite undervalued. Over 1, you'd look and say this stock is probably overvalued for the expected growth that's going to come. Under 0, where it gets into the negatives, it's much like those, and this is most likely why those 2 analysts are predicting a negative upcoming earnings period, is because of this here and how these calculations and numbers are working out. And so this is predicting a negative growth future for the upcoming period. Now these numbers, it's a mathematical equation, right? Things can change quickly, and the entire service sector has been hit hard with all the stuff about AI and everything, and Figma's actually working with AI to do things, as many companies are. But you look at the stock of Adobe and others like that, ServiceNow and other companies, and they've been hit pretty hard. So this is why when we look at the analyst target, the analyst target is actually saying an upside of 83.2%. Fair value, as we saw earlier, down 11.4%. This is why. And so you got those 2 analysts that are negative about the upcoming earnings, but analysts in general are saying up 83% potential upside from here. which is massive. That's a double, and that would only take you to $40. We've seen the 52-week range. $40 from here is 100%. We've seen the 52-week range much, much higher than that. And so, who is Figma for? Figma is if you've got space in your overall percentage of your speculative area that you like, the money that you set aside for speculative investments. Figma is for you. If you've got, if you can handle the volatility, the up and down, and if you're prepared to hold it long term and ride the waves, then if you these three things, Figma may fit within your portfolio. We see the math, and when all the numbers are crunched, when you're looking purely at the numbers, the PEG ratio doesn't look good. The price to earnings, the fair value, but when you bring in the human element of the analysts and such, then it paints a little bit of a different picture with what the analysts are saying. And so if you have a stock you'd like me to review, do this on investing.com. Pop it in the comments below. If you haven't subscribed, be sure to subscribe, hit the bell icon so you don't miss, and you can see the data as soon as it comes out. And thank you to everyone who does subscribe, and we'll see you in the next video.